what the heck is happening with the stress test, because we thought a whole bunch of things were going to happen and they didn't. We thought lenders would react one way and it didn't. We thought people would have a mad rush into the market trying to buy a house before June 1st. And lo and behold, there wasn't a rush. And we want to delve into what the psychology behind this is and what we think is going to happen next. And that's what we're going to discuss in today's video. But before we do that, do me that favor, hit the subscribe button, hit that notification bell, and please hit the like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers. We are going to be at about 13,000 subscribers by the time this video gets published. And by the time we hit 25,000 subscribers, we're going to give away $5,000 to one lucky winner to put towards their RESP, their TFSA, their RSP, or to pay down their mortgage. The choice is the winner's. All you have to do to win is click that subscribe button. It's free, it's easy, and it's definitely worth it. The definitive guide on how to manage your credit. Product, penalty, price in that order. It's never been more important to get your mortgage right. Okay, so we're going to get into it and we're going to discuss what's happening with the mortgage stress test. But before I do that, I just want to make a quick announcement with respect to a couple of my courses, the First Time Homebuyers Bootcamp and the Secrets to Getting the Lowest Interest Rate. Just like the stress test is coming on June 1st, on June 1st, a price increase is coming on both of those courses. We're going to jack up the price on both of them because they've been quite successful. And quite honestly, the amount of value that we're giving in those courses is so big for the very little that we've been charging. So it's not going to be a big increase, but we're going to increase the prices nonetheless. The Secrets to Getting the Lowest Interest Rate course is all about how to negotiate with a broker, a bank, on your renewal, all of those things. It teaches you how to get the absolute lowest rates, as well as also what to look out for with respect to landmines, surprises, and things that come along with those super low rate discount mortgages. We firmly believe that anybody who takes that course is going to be able to negotiate and get the best rate they possibly can and save 10 to 50 times the cost of the course. It is that good and the information is that good. There's one chapter alone that is all about the margins that are available in a mortgage and how a bank basically charges margins and how much is available to you to negotiate that is worth the price of admission on its own. And there's also a really special offer in there for Mortgage 360 if you choose to get your mortgage eventually through us. But if you have your own bank, your own broker, that's fine too. We understand that people can't always come to Mortgage 360 for their mortgage. And the main thing here for me is to be in line with my why, which is to help people thrive and give back. And therefore, I'm giving you guys the information or access to the information that Mortgage 360 clients would get as well. That course is priced incredibly low right now. I'll also put a 50% off coupon in the description below, so you can get 50% off the already discounted price. And again, the price on that will go up on June 1st. And then our First Time Homebuyers Bootcamp, which is in progress at the moment, is still going. It's going to go a couple weeks longer than expected. We're going to be adding a lot more information than I expected to. And that course, again, available, the link in the description below, and you're more than welcome to join us on that journey. So let's get into it. Let's discuss what is going on with the mortgage stress test and take a look at the headlines. Here it is. Rob McLister from formerly Canadian Mortgage Trends, now RatesBuy, and you can see is on the screen here, and talking about the mortgage stress test and about how it's about to get tougher to purchase a house, but there hasn't been this surge in buying that we expected. See, previously when there was changes to the stress test, when the stress test was introduced, anytime there was a new rule introduced for mortgages, there's always been this rush to the market. And that isn't happening this time. And I think there's a couple of reasons why, which I have a hypothesis on this, and I'll tell you at the end of the video. But for the most part, the stress test is not leading people to rush to the market. And it's interesting because what we're seeing right now is we're seeing all sorts of interpretations on the stress test. We are seeing lenders that are flat out saying, if you are submitting a deal to us prior to June 1st, you're good on the old stress test. And if it's after, then you are basically going to be qualifying at the new rate, which is 5.25. Then we're seeing lenders that are saying, okay, well, anything prior to May 28th, we may look at under the old stress test. And anything after May 28th, as far as a pre-approval goes, is definitely going to be looked at under the new stress test. And of course, they've given right up till the June guideline in order for people to submit their deals. The May 28th, just to clarify, is for pre-approvals only. So pre-approvals prior to May 28th, some of the lenders are looking at. And after that, they are looking at it under the new stress test. Of course, anytime up to tomorrow, June 1st, if you are submitting a deal and it has a written and accepted offer prior to June 1st, you can still potentially qualify at that previous stress test rate. So this is quite honestly the most confusing change in the rules that I've seen of all the rules changes that we've had in the last 13 to 14 years. This one is the most confusing because different lenders are looking at it differently. And I think a lot of that is to do with this right here, which is the OSFI recommendation on how to implement this. And basically what they've said is that they're going to give lenders the ability to use discretion prior to June 1st. So basically what that means is that pre-approvals, pre-qualifications, it's the Wild West out there. It really depends on what your lender is doing and what they're thinking with respect to how they're going to honor it. And I think what's happening is we're seeing collectively the banks and the lenders go, we don't want to create a rush to the market. And we're actually encouraging the higher interest rates and the higher qualifying rates in order to help cool down the market. So there isn't this one or two lenders that we expected would say, hey, right up to June 1st, if you get a pre-approval, we're going to honor the previous qualifying rate. No, most of them are actually trying to hedge on it and trying to get the newer borrowers qualifying at the higher rates in order to make it so they qualify for less. And hopefully that creates an easing in the market. Now, again, this is interesting because it is the opposite of what we expected. We expected a lot of people to be running into the market and getting pre-approved and then basically having 120 days to purchase at those previous qualifying rates. And that just isn't what's going to happen. But what's more interesting is it seems like buyers are collectively saying, you know what, we're going to hold off too and see what happens with the market come June, July, August, and see if this increase in stress test maybe gets us a little bit of a relaxation in the increases in housing prices, maybe cools things off a little bit so we aren't purchasing in these absolutely insane markets. And I actually think that's a pretty good thought process for a buyer right now to kind of take a wait and see approach. So, drastically different outcomes than previous stress test changes. And I really, really, really am surprised that at least one lender didn't jump on the pre-approval bandwagon, giving people the opportunity to purchase for the next 120 days under the old qualifying rate. I'm really surprised that there aren't more buyers who are out there trying to get in at the previous stress test rate. I mean, I guess at the end of the day, it's only a 4% or a 5% change in purchasing price. So if somebody was looking at $500,000 homes before, they're looking at $475,000 now. So I guess that's pretty much the same sort of range with respect to what type of property you're going to buy. Maybe you're getting slightly different finishings. Maybe you're getting something that needs a little bit of work, but I guess it's relatively similar in the scale of the type of property that somebody is looking at. Now, the other thing that could be happening here is we could just have exhausted the number of available buyers. Maybe the number of people that were available to purchase bigger homes in the suburbs in this mass shift from downtown living to suburb living, maybe that group has just gone away. Or maybe as it seems like lockdowns are going to relax and we're going to be back to more normal, maybe less people are looking at purchasing now and maybe going back to where they were previously living and just kind of going, hey, we're good with this now. I don't know what the answer is here, and we're going to know more in the June real estate market update, which is coming up in about 10 to 15 days. But it's really, really interesting. The market dynamic has definitely changed. It's not as crazy as it was a month ago or a month or 2 months ago. It really has just kind of cooled out. And I think the stress test change may have helped a little bit. Now, who's to say what's going to happen in the summer? Who's to say what's going to happen in the fall? We could see this be just a lull and things continue to go back to where they were. But I think at the end of the day, this is turning out to be a good thing with respect to cooling out markets and making it so those crazy bidding wars aren't quite as prevalent as they once were. Now, we're going to see what happens in June. We're going to see what happens in July, but this could be the start of the settling of the market. I don't think there's going to be a crash. Maybe there could be, but I think, with the banks reporting record profits and basically saying they're out of that COVID zone and out of the worries that they expected that they were going to have, I think in the grand scheme of things, we are headed towards normalcy and probably a pretty flat real estate market for the next 3 to 4 years, especially since I think with these low rates, basically what we've done is we borrowed a whole bunch of the activity that was going to come in 2022 and 2023 and 2024, the people that were going to make those moves in those years, and fast track them into 2021. And I think we have basically worked our way through those. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about a race to 25,000 subscribers. We're going to give away 5,000 subscribers, and I sincerely hope you are the winner. Cheers.